All right, thank you. Good morning, everyone. I'd like to call this hearing to order and acknowledge that we're in Treaty 1 territory and the home of the traditional lands of the Ojibwe, the Innu, the Dakota people, and the national homeland of the Red River Métis. Our drinking water comes from Shoal Lake 40 First Nation in Treaty 3 territory. My name is Ron Merritt. I'll be your chairperson this morning. Introducing the panel members via the Zoom is Michelle Duncan and Linda Schultz. Our secretary is Zach Mohan, and representing the city from the assessment department is Mackenzie Omachinski. To the Zoom participants hearing, please note that you will be placed in the waiting room until the property is called upon. It'll be then your turn to be admitted to the meeting. Kindly follow along the City of Winnipeg Board of Revision YouTube channel for the hearing process. Once the host has admitted you to the hearing, please close or mute your YouTube player. You will then be admitted to speak in respect to the property. Once the hearing has been concluded, you may leave. This morning we'll be hearing an application of the risk for the assessment role in accordance with the Municipal Assessment Act. The matters for which the revision is requested has been described in each application, and we'll limit discussions to those matters. The statements that are made at this hearing are sworn testimony, and anybody speaking these matters must be sworn in. Please be advised that comparisons of assessments of properties are not considered evidence of market value by the Board of Revision. The board is appointed annually by City Council and is independent along with the City Administration. It makes decisions based on the evidence provided at this hearing and issue a written order that will be mailed to all parties as soon as possible. Please note that the board decision in respect to application may be appealed to the Manitoba Municipal Board if the matter pertains to assessed value or classification, or to Court of King's Bench if the matter pertains to application from exemptions from taxation. Excuse me. Should you appeal, or should you wish to appeal, information on how to do so will be included in the board's order. In respect to the hearing this morning, I will confirm the points of appeal with your properties to be addressed with each applicant following the swearing in. We'll then have the assessor's testimony, followed by questions that the applicant may have. It will be then the applicant's testimony followed by questions. Each party will have the opportunity to summarize if they wish. Once all evidence about the application has been brought forward, the applicant may leave. The process will repeat for each item on the docket this morning. The session will close after all applications have been heard, and the board will deliberate in private and make its decisions. You will receive the board's decision by registered mail as soon as possible. As information, all public hearings are live stream recorded and would be part of the public record. This morning we'll be hearing items 1, 2, 5, and 7 on the agenda. Mr. Secretary, Mr. Mohan, could you please swear in or affirm the assessors?
Of course, Mr. Chair. Mr. Assessor, please state your full name.
Mackenzie Omachinski.
Do you affirm that the evidence you're about to give at this hearing is the truth, the whole truth, and nothing but the truth?
Yes, I do.
Thank you. And I'll go to Altus now. All right. Mr. Charlebois Page, please state your full name.
Stephen Charlebois Page.
Do you affirm that the evidence you're about to give at this hearing is the truth, the whole truth, and nothing but the truth?
I do.
Thank you. And Mr. Abbas, please state your full name.
Ashara Abbas.
Do you affirm that the evidence you're about to give at this hearing is the truth, the whole truth, and nothing but the truth?
I do.
Thank you.
All right, we'll begin with the first item on the docket, which is 728 Taché Avenue. Mr. Assessor, whenever you're ready, you can take us through this property.
Okay, thank you. This is file number 24-1519, roll number 06061. Oh, sorry, I have the, one moment, correction here. File number 24-3016, roll number 0606108, 6000. The address is 718 Taché Avenue. Roll year 2025, reference date April 1st, 2023. Assessed value is $1,470,000, classification 20, liability G. There is one building with 3 stories. The actual and effective year built is 1979. There is 12 suites and 7 outdoor parking spots. On to page 2 for subject sale history. There's no sales history for the subject property. We'll go on to page 3. This is the income value summary. So for number of units, we have 9 2-bedroom units and 3 3-bedroom units for a total of 12 units. The average monthly rent per unit, we're looking at $1,017.70. The gross potential rent is $146,549. The vacancy rate is 2.6%. The effective gross income is $142,739. The expense rate is 51.08%. The net operating income we have at $69,828. The capitalization rate we have at 4.75%, and the estimated market value is $1,470,000 with a market value per suite at $122,500. The following page, 4 and 5, is the CMHC private apartment average rents. Because this is a subsidized property, I computed this chart so it breaks down the combined averages for the zone that the property is in, the year that it was built, and then the building unit count. So for the combined averages, we have market CMHC potential rent of $195,828 compared to our model rent of $146,549, which gives us the percentage of market rents at 74.84%. We'll go on to page 6 where we have rent comparables. The effective year built for these comparables range from 1961 to 1980. The total number of units range from 4 to 27. Number of 1-bedroom ranges from 15 to 1, and number of 2-bedroom ranges from 0 to 12. The average monthly rent per unit ranges from $917 to $1,039. The next page is capitalization rate information provided by the city, and then we have the capitalization rate evidence. And that'll be on page 8. The following is a sample of actual sales that took place during the reference period. The purpose of showing these individual capitalization rates is to illustrate the accuracy of the model and substantiate the model-derived capitalization rates. They're not meant to be comparable specific to the subject property. We'll go to page 9, which is the municipal assessment act excerpts, and then page 10, which we have a aerial photo of where the property lies, and then a street view photo of the exterior of the property. And that will be my presentation. I am open for questions. Thank you.
I thank you. Mr. Applicant, questions of the assessor?
Yes, thank you, Mr. Chair. So Mackenzie, can I just confirm with you the value presented today is model generated?
Yes, it is.
You noted this property is rent geared to income or social housing. That's obviously taken into consideration from a rent perspective on page 5. Do you know if the model took into consideration that this was social housing when it derived a capitalization rate?
I'm not sure if the model would specifically take into consideration. I was looking at just the income quality of the property in the model, and we do have it at below average, which would tend to indicate that that there is some weight put on it being income based.
Okay, so it just this one's at a 4.75 cap. So if I could direct your attention down to page 7, we have the city rates, and then as well the brokerage firms, and a note above that says, the city model supported by those brokerage rates. Could I just maybe sort of speak with you about those rates? I sort of see a 5 to 6% capitalization rate range from the brokers. The subject property is sitting at 4.75 and it's rent geared to income. Would that indicate that's aggressive to you?
So I know that, yeah, it would be for the Colliers and Cushman and Wakefield being between 5 and 6. We'd use that in conjunction with our own City of Winnipeg evidence, with the 20th percentile being 4.75 and the 80th being 5.45. So I would believe that the model would be within reason for this property.
But do you think a social housing property should be at the bottom end of the range, even from the city's The city's got 475 to 545. This is a rent geared to income. So, you know, to me, I don't believe any specific adjustments made here, given that it's at a 475. Do you think it's too aggressive there? Even contemplating just the city's range in isolation, do you think it belongs at the high end of the quality range?
Well, it is quite a smaller property, which would open the investment pool to more potential buyers, and it's just in comparison to other properties on this docket's capitalization rate. It's a 30 years newer than these other properties that also would have a capitalization rate in that range. So I believe that the model is correct, or the model is reasonable in this case.
So maybe I'll just touch up on something you just said there. You said this would be open to a larger pool of buyers given its size. Given the income stream, do you think that small market participants are looking for subsidized income properties?
I wouldn't think so, but if they were to purchase a property like this, then there is the possibility of making it so it's not a income a property based on income rent in comparison to. So yeah, if they were to buy this property, its likelihood in the highest and best use would be to convert it to something that wouldn't be an income based property.
And just to confirm with you, though, you know, this sort of an asset provides a sort of a social need within the community. No study has been done from a highest and best use perspective to determine that it could go to market and the need of those units within the community would be filled. Is that fair?
Yeah, you're correct.
Okay. So and then I'll just sort of finalize there. So the model, you know, I don't think has made a specific adjustment. You've said that the quality class is ranked lower. You've made no specific adjustment for it being social housing in terms of a cap rate. Is that a fair comment?
Yeah, that is a fair comment.
Okay, that concludes my questions. Thank you.
I thank you. Ms. Duncan, questions of the assessor?
Just a couple. With your rent comparables, are any of them also subsidized housing?
I don't actually know that that information for the rent comparables.
And then in regards to your cap rate evidence chart, are any of those properties subsidized properties?
I do not know. They would not be subsidized properties, to my knowledge.
And out of those cap rate evidence chart properties, which ones do you think would fit the closest to the subject?
I would point to 479 Sargent Avenue, or sorry, just one moment. 203 Bertland Street as well. Those are probably my two that would jump out at me, just for the suites being very close to the subject property and the age.
Okay, and then I don't believe there's any photo. Have you inspected this property?
I did not have time to inspect this property. That is just an exterior photo taken from the internet.
So you don't have any pictures of any interior photos?
No, not that I was able to find.
So we're not entirely sure what the condition of that property would be on the inside.
Correct.
Okay, thank you. No other questions.
Mr. Chair, could I ask a follow-up question on one of those notes?
Certainly.
Page 8, the cap rate chart that you guys were just discussing. Can I just confirm with you, Mackenzie, have any adjustments to your knowledge been made to those, or are those sale price over income in place?
Not to my knowledge, any adjustments have been made.
Okay, so those are just sale price to income to derive those capitalization rates. Is that fair?
I wouldn't actually know I wouldn't know the definitive answer to that.
And those could be in the model, but not necessarily are used to determine, you know, a cap rate from the model perspective?
Yeah.
Okay, thank you.
I thank you. Ms. Schultz, questions of the assessor?
Mine have been asked and answered. Thank you.
All right, I have no questions either, other than this is your typical 12-unit apartment building in St. Boniface, and it has a lack of parking spots for it has 12 suites and only 7, parking spots. Do you think that is a little bit of a drawback in regards to possible sale or value?
It could be a little bit of a drawback. Yeah. It's something that you see more with older properties.
And it was built in 1979. So, and the expenses are 51% of the gross rent, or the effective gross rent. Is that you think that is applicable for a 1979 building?
To my knowledge, yeah, I would go with the model expense rate.
So everything is model driven.
Correct.
All right. All right. Mr. Applicant, Mr. Page, whenever you're ready, you can take us through this property.
Thank you, Mr. Chair. So we have a 3-story building built in 1979. Site area 12,117 square feet, 12 units comprised of 9 2-bed and 3 3-bedroom. And I've set aside the sales comparison and the cost approach to focus in on the income approach. For this property, it's rent geared to income. So the city has adjusted the rents downward from CMHC from market. We're not going to dispute that income, as the income in place for this type of asset would be too low to survey from a valuation perspective, and the vacancy allowance. Obviously, we'd rely on market, given the type of the asset we have here. The expense allowance is 51.1, and for the purposes of this valuation, I've accepted that adjustment of 72,911 without better evidence to present to the board. Again, the expenses on these properties can run quite high. There's a number of reasons. It's typically lower quality construction, maybe more tenant turnover, and difficulties of managing sort of a social housing asset. So for me, I've used the NOI of 69,828. For me, I've applied a cap rate of 6.25%. So I've attached a capitalization rate study, long document, but it goes over certain macroeconomic factors, certainly rising interest rates into April 1st, 2023 valuation date. We stratified these by range. And you'll see that in my capitalization rate section, this one would fall into this 1970 to 1989 sort of category. That range for us is 5.5 to 6.25. So the base cap rate I've applied is 5.75, and I've added a 0.5 or half point cap rate premium for the subsidized housing sort of a component of the subject property. That gives me a 6.25% capitalization rate. Again, the attached study has 6 sales that range from 5.25 to 7.11. Again, that range I sort of stratified and then added a premium for the type of housing, the type of income. There's an adjustment required for the durability of income, in my opinion. There's a number of factors that could have been contemplated under expense, but just to sort of provide a brief summary, again, I kind of noted on higher expenses, typically turnover, maybe a more wear and tear to the property, and obviously less funding than typical market to upkeep those sites. So for that reason, 625 is applied. My reconciliation of value there is 1,117,000 rounded downward, and that concludes my presentation.
I thank you. Mr. Assessor, questions of the applicant?
I have no questions on the current property. I know that I'll have to read in my rebuttal evidence at some point.
Okay. You have rebuttal?
I also have rebuttal as well,
Okay.
Mr. Chair.
We'll deal with that after. Okay.
Okay. Sounds good.
Ms. Duncan, any questions?
No questions, thank you.
Okay. Ms. Schultz?
No questions, thank you.
All right, let's deal with the rebuttal, and the assessor is up first, if you don't mind. So do we have rebuttal evidence here, Zach?
Just a moment, I have to upload it to every
Okay.
party.
Okay.
So
Mr.
just
Chair.
a couple seconds.
Could I maybe just request that for the rest of this docket, my rebuttal carry forward? It's a long document that's, I'm just going to provide a brief summary on, and it'd be relevant to the remaining 3 properties. And I know Mackenzie and I have done this on a few different matters. If the board would allow it, I would ask that to be carried forward.
We will do that, but you will have to state that for the record for each and every one that we have. Is that okay?
Yep,
Okay.
that's great.
But it is applicable, yes.
Okay,
So-
thank you.
So Zach, you can tell us that when we get the rebuttal information
For
and
sure.
everybody. Yeah.
Okay, just sent it to you, Mr. Assessor, so it might be a couple moments. I'll upload it to the panel right now.
Okay. Just everybody, whenever you get it, you can let us know.
Okay, it should have updated to the SharePoint. It's gonna be underneath the cap rate study. At least on my computer.
I got the Altus one. Was the city not, didn't the city have one as well?
They're gonna.
City does, I'll just, I'll do that one afterwards, because if I.
Yeah,
don't-
Okay.
we'll just
Okay.
do we'll do the cities first.
Oh, the
Linda.
cities first,
Yeah.
okay.
I'm sorry. Yeah. That's where we're at, I think, eh?
Yeah,
Okay,
We're doing the assessors first.
oh,
okay,
this,
a moment, please.
Sounds good.
Ms. Duncan, are you okay?
Yep, I have the Altus one.
Okay. And Ms. Schultz, are you
yes.
okay?
Yep.
Okay. You may proceed, Mr.
Oh, sorry, just
Assessor.
a couple more moments, I just gotta wait, so.
We don't have the city
Okay.
one yet.
Yeah,
Okay,
just working on that at the moment.
okay.
Okay, so similarly, the AMT has been
Got it.
uploaded, it's gonna be under item 7, or sorry,
I-
number 7, not item 7.
I've got the city one as well. I've got
Oh.
cities.
Okay, perfect, and Mr. Charlevoix page, it should be coming to you momentarily.
Okay, thank you. I'll just let everyone know when I receive it.
Yeah,
I have it. Thank you.
Yes. Are we doing city first,
yes.
Mr. Chair? Thank you.
Mr. Assessor,
Yes.
are we ready to go?
Yep. Sorry, everyone has it now.
I don't have it just yet.
Okay.
I mean, I think I know which document it is. I think
Yeah,
I'm
you
familiar with
probably
it, but
shouldn't- yeah.
if we, you know what, if it's the same one, we could probably proceed, and I have my question already ready to go. So,
Okay,
All right,
sounds good.
let's proceed then. Mr. Assessor, the floor is yours, please.
Okay, thank you. So yeah, this is the City of Winnipeg rebuttal to Altus 2025 cap rate sales analysis. We're just looking at 5 sales from Altus here. So for sales 1 to 3, there's 1 year of income and expense information, and it's insufficient to calculate a stabilized net operating income. Sale 4, we have no actual income and expenses involved in the calculation of net operating income. And then sale 5, the potential gross income utilized by Altus is not based on historically reported information to be incorrectly stabilized. So then we'll just go to page 2. We just have the 345 Talbot Ave Altus stabilization. We only have 1 year of income and expense. I believe that's insufficient for determining a cap rate for the cap rate study. Then on page 3, it's just the the workup for, or sorry, the income and expense for Talbot. And then page 4, it's the same idea for 677 Maryland Street, 1 year of income and expense information. And then we have, if we go to page 6, it would be the same for 738 St. Mary's Road, Alta stabilization. So only have 1 year in 2021. Insufficient information for determining cap rate. Pardon me. And then on page 9 for 100 Maryland Street, we don't have any actuals for the data. So that we don't believe that would be good for evidence to determining the capitalization rate. And page 10, we have 2390 McPhillips, so this is the Altus stabilization. The Altus calculation average rent levels are inconsistent with the rents reported to the prior year. So on the following page, on 11, we have the City of Winnipeg stabilization of 2390 McPhillips Street, and we come to a capitalization rate of 4.71%. And that would be my rebuttal evidence. I'm open for questions.
I thank you. Mr. Applicant, the floor is yours. Ask some questions for the rebuttal.
Thank you, Mr. Chair. So just one note, Mackenzie, is I do see there it says 1 year of income and expense is make insufficient, it's unusable. Just to confirm, the IAAO or the Appraisal Institute of Canada, does that standard come from a valuation, a professional standard, or is that the opinion of the City of Winnipeg?
With the opinion of City of Winnipeg, we're looking for about 3 years just to iron out any inconsistencies, so we can see that there's we can determine a reasonable cap rate with enough information.
Okay, thank you. That's my question.
Thank you. Ms. Duncan, questions?
No questions, thank you.
Thank you. Ms. Schultz?
No questions, thank you.
Okay. Mr. Page, your rebuttal?
Thank you, Mr. Chair. So I'll just pull that up. Sorry, I have the cities up right now. Bear with me. Okay, so I will keep this brief. This is in rebuttal to the city's evidence provided in that chart. I believe it's on page 8 of the brief. Sort of those sales used to support the modeled cap. Just some macroeconomic stuff, so I'll skip over the first couple pages. You've got 4.5% GIC rate at the valuation date, meaning you can get a government-insured investment at 4.5%. Capitalization rate factors in borrowing rates into, it's one of the components that derives that factor, sort of risk and durability of income. Then I'll just touch briefly on 727 and 241 Yonge. Those are two sales that I would say that are outside the typical range. They're at 3.46% and 4.21% as calculated by the city. What this shows, in my opinion, is that the prospective buyer is buying an opportunity that's not relevant to the income in place. Meaning, these are calculated by dividing the income or using the income in the sale price to determine a direct cap, but no contemplation, no sort of appraisal theory or adjustments been made to the idea that likely they're buying an opportunity outside of the income in place, whether that's upside in the rents themselves or other development. So then I'll just quickly note on page 22, the sale of 677 Maryland. The city is using the older of two sales. There's the property sold in 2020 and it sold again in 2023, right at the beginning, March 1st, 2023. It sold in March 2023 for $2,176,000, and we derived a cap rate of that from that sale at 7.11. If the city assessed NOI was used on that sale, it would come out at 6.2. Just for consideration, the newer sale there. And that concludes my presentation in regards to the rebuttal.
I thank you. Mr. Assessor, questions of the applicant?
No questions. Thank you.
Thank you. Ms. Duncan?
No questions, thank you.
Thank you. Ms. Schultz?
No questions, thank you.
Either party wants summation?
I don't need summation. Thank you.
I'll just take a brief one, just a one-liner. I just would ask the board to consider this property as a social housing asset and contemplate that factor as they consider capitalization rates. Thank you.
All right, I thank you. We'll move on to the next property, which is item number 2, which is 287 Provencher Boulevard. Mr. Assessor, whenever you're ready, you can take us through this property.
Okay, thank you. This is file number 24-1519, roll number 0606100300. Address is 287 Provencher Boulevard. Roll year 2025, reference date April 1st, 2023. The assessed value is $1,044,000. Classification 20 and liability T. There is one building with 2 stories. The actual and effective year built is 1946. There is 11 suites with 4 outdoor parking spots. We will go to page 3. We have the number of units. There is 11 one-bedroom units for a total of 11 units. The average monthly rent per unit would be $794.83. The gross potential rent is $104,918. The vacancy rate is 2.6%. The effective gross income is $102,190. The expense rate is 50.43%. The net operating income is $50,656. Capitalization rate is 4.85%, and the estimated market value rounded would be $1,044,000. The market value per suite we have at $94,909.09. We'll go to page 4 with our rent comparables. So for these comparables, the effective year built ranges from 1952 to 1964. The number of units range from 9 to 23. Number of bachelor, 1 to 4. Number of one bedroom would be 6 to 10. And number of 2 bedroom would be 2 to 12. The average monthly rent per unit ranges from $810 to $880. The following page is the capitalization rate information, followed by the capitalization rate evidence, and then the municipal act excerpts on 7. And then on 8, we have an aerial photo of where the property lies with street photo. And then from pages 9 to 12, we have the multifamily questionnaire, the rent roll, and the income report. It didn't give the difference of the expenses less the total revenue. So when I calculated that, we had a net operating income after expenses of $52,321.33. And that would be my presentation. Thank you for listening. I'm open for questions.
I thank you. Mr. Page, questions of the assessor?
I have no questions.
Thank you. Ms. Duncan?
No questions, thank you.
Thank you. Ms. Schultz?
No questions, thank you.
Okay. I have none. Mr. Page, your presentation or your desires?
I am seeking confirmation, Mr. Chair. Thank you.
Okay. Mr. Assessor, any questions?
No questions. Thank you.
Panel members, any questions in regards to the seeking confirmation?
No questions.
Ms. Schultz?
Sorry, no questions, thank you.
All right. Okay, let's press on. Mr. Page, are you finished now?
I have completed. Would you like me to stay on? I know Ashar is going to ask to carry
if you want to stay on, that's fine.
I'm going to stay on mute because Ashar is going to ask for the commentary on the rebuttal carry forward. And if anything comes up through that, I would be stay on to answer that. So anyway, I'll just stay here muted, but thank you.
Okay, fine. So the next property that we have is item number 5, which is 227 Ferndale Avenue. So, Mr. Cesar, whenever you're ready, you can take us through this property.
Okay, thank you. This is file number 24-3660, roll number 0609021500. The address is 227 Ferndale Avenue. Roll year 2025, reference date April 1st, 2023. The assessed value is $1,061,000. Classification 20, the liability T. Number of buildings, we have 1 with 2 stories. The actual and effective year built is 1946, with 11 suites and 4 outdoor parking spots. We'll go to subject sale history. So for April 2nd, 2019, we have a subject sale for $1 million. And then, follow along to page 3 for the income value summary. So for number of unit breakdown, we have 11 one-bedroom with 1 two-bedroom for a total of 11 units. The average monthly rent per unit we have at $807.09. For gross potential rent, we have $106,536. There is 2.6% for vacancy rate. The effective gross income would be $103,766. Expense rate we have at 50.43%. The net operating income is $51,437. The capitalization rate would be 4.85%. The estimated market value rounded would be $1,061,000, with a market value per suite at $96,454.55. On page 4, with the rent comparables, we have an effective year built range of 1952 to 1973. Total number of units ranging from 9 to 16, number of bathrooms 0 to 1, number of 1 bedroom 5 to 16, and number of 2 bedroom 0 to 3. The average monthly rent per unit ranges from $748 to $877. Page 5 is the capitalization rate information. 6 would be the capitalization rate evidence, which was previously read. And then 7, we have the Municipal Assessment Act excerpts. And 8 is the aerial photo of where the property lies with the exterior photo. And on 9, we have permit for landlord work. This is repair of damage caused by fire in 2 suites on the 2nd and 3rd floor of an existent multi-tenant story building. Mechanical and electrical work and no structural work noted. This would be a declared construction value of $75,000. Move to page 10, which is the income statement, and that goes to page 11, which we have a net operating income reported of $48,142.68. And then on page 12, we have the rent roll. And that will be my presentation. I'm open for questions. Thank you.
I thank you. Mr. Abbas, questions of the assessor?
Yes, I do have a couple of questions. Mr. Assessor, can you confirm the value we are discussing today is model generated?
Yeah, it's model generated.
Okay, thank you. And then my second question would be in regards to the cap rate table on page 5. If you look at cities, multifamily, low rise, the range is 4.75 to 5.45. Would you agree that for this property's original age of 1946, it is aggressive to put it on the lower end of the cap rate range?
So we use those as part of our evidence. There's other factors like our own City of Winnipeg work that was completed for cap rate study. And just because of the size and location of the property, I do believe that the model does have it correct at the current capitalization rate of 4.85%.
Okay. Okay, perfect. Thank you. Those were all my questions.
I thank you. Ms. Duncan, questions of the assessor?
No questions, thank you.
I thank you. Ms. Schultz?
Have you had a chance to inspect this property?
I have not had a chance, no.
Okay, so just those external pictures.
Correct, yeah.
Okay, no further questions. Thank you.
I thank you. Mr. Assessor, for a 1946 building, do you think the cap rate is fairly low for a building of this age?
I wouldn't say that I think it is reasonable. Like I would point to our own capitalization rate evidence with 555 Corden Avenue or 459 Sargent Avenue, also having showing the lower capitalization rates. Sorry, not 555 Corden Avenue, but 203 Bertland Street.
All right. You have rebuttal for this also?
I do. I would ask that this is my apology. I can read it in again. I meant to ask
Okay.
that the rebuttal be carried forward
Okay.
previously.
Yes. Okay, I thank you.
Thank you.
Mr. Abbas, we're ready for your presentation. The floor is yours.
Thank you, Mr. Chair. Before I start, I would just apologize. There are no page numbers on my brief itself, so I would be referring to the PDF document page numbers. If you have my document open in the PDF version, I would be referring to the page numbers as per the PDF.
All right.
So if you turn to page 2, we have a summary of some of the facts of the property as well as our requested assessment on the last line of $893,000. You can see that the property's original age is 1946 and the effective age according to the city as well is 1946. If we scroll down to page 6 of the PDF document, we have some property maps. So we have an aerial map view and then a Google map view of the location and the adjacent neighborhoods, and then an exterior photo of the property itself. Now I would request the board to move on page 14. We have our cap rate summary over there, cap rate table summary on page 14, and I will go over it now. Please let me know when you guys are on page 14 of the PDF document.
I'm good.
Yep. Okay.
Yep.
Thank you. So we can see over here that the property's original age is 1946, and according to our cap rate table, this lies on the second age, effective year ages, which is from 1946 to 1969. We're putting it at a 5.75% cap rate for this property, which is right on the lower end of the age. This property would be, we are considering this property would be in average condition based on the year built. And we have not inspected this property, so it would be basically assumed on the built year of this property. The condition of the property would be assumed on the built year of this property. If you move on page 16, we have our income summary, and I will go over it right now. So for potential market gross rent, we are using the actual rents that were placed for this property. We are using 132,646, which were actual for the year 2022. And then we are adding in laundry revenue, parking revenue, and miscellaneous income on that line. And we are coming in with a revenue of an effective gross income of 135,546. Below are all the expenses that we have stabilized. And I will just mention the total expenses over here. We are stabilizing all the expenses, and we are having a total expenses of 84,222, which comes to an expense ratio of 62.1%. The next line, the net operating income, we are having a net operating income of 51,324, which is very similar and aligns with the net operating income that is being applied by the city for this property. City is applying 51,437, and our stabilized net operating income is 51,324. Below that, we are applying our 5.75% cap rate, which I went over a couple of minutes ago. And after our cap rate, applied cap rate, we are coming in at a value of 892,599, rounded off to 893,000. That would be all from my presentation. I do have some pictures of the interior of the building that I have attached in my appendix. Those were taken from the property management's website and on the internet. we did not had a chance to inspect this property. Thank you.
Thank you. Mr. Assessor, questions of the applicant?
No, I have no questions. Thank you.
Okay, thank you. Ms. Duncan?
No questions, thank you.
I thank you. Ms. Schultz?
No questions, thank you.
I have none either. Mr. Abbas, you have rebuttal also, which you want to carry forward from the previous, what we heard?
Yes, I would request the board to please allow the rebuttal that was presented by Mr. Shalaboy to be carried forward for this property as well.
All right. I thank you. Either party want summation?
I don't need summation. Thank you.
I don't need submission as well. Thank you.
All right. Let's go to the last property that we have on the docket, which is number 7. It's 166 Boulevard Road. Mr. Assessor, whenever you're ready, you can take us through this property.
Okay, thank you, Mr. Chair. This is file number 24-1832, rule number 080041888500. The address is 166 Bellevue Road, rule number rule year 2025, reference date April 1st, 2023, assessed value $1,160,000, classification 40, liability S. There is one building with one story. The actual and effective year built would be 1968. There is 26 suites with 10 outdoor parking spots. There is, on page 2, subject sale history. There's no sales history for the subject property. Page 3, we have the income value summary. So for the number of units, we have 22 bachelor units and 4 one-bedroom units for a total of 26 units. The average monthly rent per unit we have at $588.08. The net operating, the gross potential rent would be $183,478. The vacancy rate we have at 3.6%. Effective gross income would be $176,873. We have a 68.18% expense rate for the property. The net operating income is $56,263. We have a 4.85% capitalization rate with an estimated market value of $1,160,000 for a market value per suite at $44,615.38. This is also a seniors assisted living complex, so I did do a CMHC private apartment rents, average rents. This is for the zone St. Patel, and I did that. On page 5 we have the combined averages of the CMHC zone, the year built, and the building count for a total market CMHC potential rent of $263,392,000 for the compared to our modeled rent of $183,478 for a percentage of market rents sitting at 69.66%. The following page, we have our rent comparables. This would be effective year built ranging from 1957 to 1986. The total number of units range from 11 to 102. A number of bachelor would be 0 to 24. A number of one bedroom would be 4 to 88. And then number of 2 would be 0 to 1. The average monthly rent per unit ranges from $574 to $844. On page 7 is our capitalization rate information, followed by the capitalization rate evidence, and on 9 municipal act excerpts. And on 10, we have just a street view of the property, followed by a aerial photo and some information about the property itself. On 11, page 11, we have a permit for exterior alterations. This dates back to would be May 2018. So it's exterior alterations to an existing multifamily dwelling to include replacing of all exterior doors and windows. The declared construction value would be $235,000 for that permit. And then we have the income statement on page 12 and 13, and that would be my presentation. I am now open for questions. Thank you.
Thank you, sir. Mr. Abbas?
Yes, thank you.
Question?
So my first question would be, Mr. Assessor, would you agree that for a non-profit assisted seniors rental, it's common to not have typical upgrades or frequent renovations like those seen in a typical market apartment?
I actually wouldn't know. I know that, yeah, I know that we have a permit updating the exterior, but I don't know the interior of the building as I wasn't able to inspect.
Okay, and then would you happen to know if the seniors non-profitable co-ops would have any sort of deferred maintenance from your experience?
From my experience, I actually do not know. Wouldn't know the answer to that question. I apologize.
Okay, no worries. My third question would be, for this property's lack of parking stalls, can that have a negative impact for a potential buyer?
Yeah, I can see that having a negative impact for a potential buyer because it's a seniors complex. I know that there is probably accommodations for the current people living there for travel, but yeah, for a potential buyer, there's less outdoor parking spots that may be a deterrent.
Okay, thank you, Mr. Chair. Those were all my questions.
I thank you. Ms. Duncan, questions of the assessor?
Yeah, just the effective age hasn't changed, even though there was a pretty significant permit for the doors and windows. Why would that not have changed?
I wouldn't know if I can see if the permit has been closed. Sometimes the permit will go through planning, property, and development, but we haven't updated on an assessment side. So I'll just quickly check to see. Yeah, so we currently have it at the status is pending. So it is been taken by a assessor or a worker in the assessment department, but hasn't been closed yet. So there may be a effective age that is impending.
Thank you. No other questions.
I thank you. Ms. Schultz?
No questions, thank you.
I thank you. Mr. Assessor, you have rebuttal for this also?
Yes, I would like my rebuttal from earlier to be carried forward to this property, please.
All right. So
Thank
be it. Mr. Abbas, the floor is yours.
Thank you, Mr. Chair. And again, I apologize. I do not have page numbers on my document. I would be referring to the PDF page numbers. Very similar. I would start on page 2, where we have the summary of the facts of the property, as well as our requested assessment on the last line, which would be $937,000. If we scroll to page 6 of the brief, of the PDF document, we have some property maps. We have an aerial map view, and then a Google map view of the location, and then an exterior photo. And now I would request the board to move to page 13. We have our capitalization summary, and I will go over it. Please let me know when you guys are on page 13.
Yes, thanks.
Yes,
Yep.
Thank you. So for this property, we are applying an overall cap rate of 6%. There were a couple of factors that we took into consideration. The property's age is 1968, which is approximately, I didn't do my math, so I can be wrong on this, but approximately 57 years old. The building type and construction for this property is wood frame construction, which was normal at that time. The durability and quality of income for this property, for that, I would say, I mean, it's a senior nonprofit rental, so there's no profit being generated out of this property. The suite mix for this property is not ideal. It's a predominantly bachelor suites. 84.6% of the suites are bachelor. The suite size for the bachelor and one bedrooms, it has the bachelor is 300 square feet, and the one bedrooms are 380 square feet, which are very small. Would be considered micro units, I would say. And considering all these facts, we applied a cap rate of 6% for this property. Now, I would request the board to please move on to page 15, where we have our income and summary valuation chart. So for this property, we are not disputing the income and the expenses. We are in line with the applied income by the city, and we have capped the expenses at the same expense ratio that was used by the city at 68.2%. Our NOIs are identical. The only dispute over here would be on cap rate. We are applying a 6% cap rate to city's 4.85%, and we are coming in at a value of $937,000. That would be my presentation, and I'm open for questions. Thank you.
Thank you. Mr. Assessor, questions of the applicant?
I have no questions. Thank you.
I thank you. Ms. Duncan?
Would you have had the opportunity to inspect the property yourself?
I apologize. I did not have the opportunity to inspect this property.
So would you folks have considered the improvements in your, at least the age of the property as far as the effective age? With like it was 235,000 in windows and doors, and the photos demonstrate it's a pretty well maintained property. Would that have been considered when you were looking at the age?
I was not aware of the permit on this property, but yeah, definitely there needs to be some sort of consideration for the permit for this property, yes.
So would that potentially change your cap rate?
I would say it would lower the cap rate a little bit, yeah.
Okay. Thank you. No other questions.
I thank you, Ms. Schultz.
No questions, thank you.
Okay, thank you. So your NOIs are exactly the same. So it all boils down to cap rate.
Yes, you're correct.
And you have rebuttal, which you would like to carry forward?
Yes, Mr. Chair, I would request the board to please carry forward the rebuttal that was presented by Mr. Shalvo for this property as well.
All right, I thank you. I think we would either party like summation?
I'd have a quick summation on this property.
Okay, go ahead.
Thank you. I would just point to with the current cap rate and estimated market value, we're looking at the market value per suite on this property at $44,615, and the average monthly rent being $588, which is almost 30% lower than the market CMHC potential rent. And that would be, so I do believe that the model is correct and reasonable in this case. And that'll be my summation. Thank you.
I thank you. Mr. Bass?
Yes, I would do a quick summation on this property
Okay.
as well. So this is a seniors assisted living property, a seniors assisted non-for-profit living property. Properties usually would have deferred maintenance. Yes, there is a permit for $235,000, but I assume that this was necessary and required to keep the property running. It's on doors and windows. Doors would be needed, would need upgrade to keep the property secured, and windows would be needed to keep the property insulated. So I think our cap rate is justified, but definitely there can be some changes made to the cap rate to come to a final valuation. That would be all for me.
I thank you. We have heard all the items scheduled for this hearing, and this hearing is now adjourned. So, gentlemen, thank you very kindly for your presentations, and results will be mailed to you as quickly as possible. So thank you, and have a good day.
Thanks, you as well.
Thank you.
Thank you. Have a good day, everyone.
Thank you.
Yeah.
Thank
Bye
you,
now.
goodbye.
Bye-bye.
Bye.